We'll call a special meeting of the village council in order. Show that we do not have a quorum, but we will continue with the meeting. Get approval of the agenda.
I move that we approve the agenda as presented.
I second.
All in favor?
Aye.
We'll bypass the removal of the council minutes. Public comment, first public comment. Is there a public comment out there? Seeing none. Okay, looks like Derek's up with a special presentation.
All right. Yeah, appreciate you guys having me this morning, accommodating and fitting me in here. I know we plan to come in February for the February board meeting, but that didn't work out. So glad to still be up here and go over the audit with you. As you mentioned, my name is Derek Graham. I'm here from UHY to present the audit for the year ended June 30th, 2024. I came up here and met January 22nd with Joni, Jim, and Diana, and went over all of this more in depth. And so I'm kind of going to highlight it for you guys here and highlight some things. Obviously, if you have any questions as we go through, feel free to ask. If you want to hold them till the end, that's fine too. I really just want to keep you guys informed, fill you in on how it went, and go over some of the numbers in here. Really, is all I'm trying to accomplish here this evening. Trying not to take too much of your time, or this morning, sorry, trying not to take too much of your time. With that being said, we'll go ahead and get started. It sounds like, I don't know, the audit should have, it sounds like it's in Dropbox, the electronic version. The hard copy didn't make it to your desk here, this morning. I'll try to let you know what page I'm on. It might not tie to the page necessarily in your PDF, but, I can at least let you know what the page number should be on the bottom, of the pages we're gonna be looking at. So just overall, before we get in and look at any of the pages in the audit, just, the audit for this year was a 16-month audit covering, March 1st of 23 through June 30th, 24. It was met with some challenges and some difficulties, none that were necessarily the fault of the village staff or village personnel. Part of, we were able to still issue our unmodified opinion, which is the highest opinion we can give. It was just in order to get there, there was a lot more work or a little more efforts, than were anticipated. And then, still have some recommendations and some improvements. We'll go over some of that here moving forward. Some of the difficulties and challenges we did run into, a lot had to do with the June year end and switching. The accounting software wasn't set up to produce reports, to cover the 16th month period. So there was a lot to do with that. So we had to piece together trial balances, general ledger we had, we had 3 different boards we were looking through at times. So, that was kind of unforeseen and unknown a little bit. So that did add some time and some, efforts on our end to get things to where they're at today and in this audit. Some of the other issues we ran into, mostly all revolved around the sewer debt service fund. And when we sat down and started the audit, we noticed there were some things that hadn't been recorded previously, regarding that fund. And I'll touch on that a little bit more in depth, but, a lot of that had to do with, with you think about Naltua, and they show that they owe the village money, or the village wasn't showing, from previously that they were owed that money from Naltua. So we kind of had to dive into some things and reconcile that and make sure, we match with what Naltua says they owe us. We show that, yeah, you do owe us for that same amount. So there was some of that, and then additionally, I don't know if you guys are aware, but the sewer special assessments that the residents have on their taxes, what the balance was showing on the previous audit versus all the collections received over the course of 28 months, and then you get a report from the township that shows, hey, here's what everyone's balance are. They didn't quite add up. So we take the beginning balance from the last audit, got all these principal payments, and it should equal the balance on the report. Well, it didn't, it was off. We're able to get that to what we would call an immaterial amount, but it's still about $27,000 off from what the report, that the township can run and say, hey, here's all the parcels, here's what each parcel owes as of this date. We just weren't able to quite get to that same number. So I do have a comment in the letter. I went over that a lot with Jim and Joni as well. And they've been working with the township to try to figure out, you know, what's right. Obviously, if the number in BSNA, which is the software they use to track that, if that's the right number, you know, why didn't we receive all those payments? Why did you?
Since then, have you gotten any closer, or are we still right there?
I haven't got an update on that yet. I know that last time, when I was up here in January, it sounds like the township was looking into that and seeing, you know, what could have went wrong there, and if, you know, I know that the payments, all the payments the township shows that they sent the village shows that they received those. So I know they matched up those records that way, so now it's a matter of, you know, if someone did pay their sewer assessment, why didn't that necessarily make its way into the village, into the debt service fund, is really the question at hand. And I think, you know, as of June 30th, that number was about 27,000 or so. I got comment in one of the letters, like I mentioned, just a little bit more information on that, that we have that too, and can refer back to that if you'd like. You know, all that being said, and talking about some of the difficulties, you know, want to make it known that, you know, the numbers in the audit here that we're gonna look at are material correct. And, you know, just in order to produce that and get to that, just required a little bit more work on our end, really, but, you know, feel good and about the numbers in here, and going over those here with you, this morning. So I'm gonna have you look at the audit on the PDF. And gonna have you go to, it's page 16 of the actual audit. Now, you might have a couple extra pages in your PDF for like
He
this.
separated it, so.
Okay. And it should say at the top, to make sure we're all on the same page and look at the same thing. You know, Village of Northport, governmental funds, and then the statement of revenues, expenditures, and changes in fund balance, okay. So, gonna work left to right and just highlight a few things of the financial position of each fund that the village has. I'm gonna start with the general fund, working left to right. So the general fund, if you move down and looking at that net change in fund balance line, you see a negative 101,241. That was what, you know, this is essentially an income statement for like a business is what we're looking at here. So the general fund had a decrease in fund balance of 101,241 for this year. Now, if you slide up a couple lines above that, you'll see that all of that and some more was derived from the transfer out, which is the transfer out to the water and fireworks. So if you factor or rule that out and say that wasn't there, you know, the operating activity from the taxes, money that comes in, the state share of revenue that comes in, and the different expenditures, you know, was an increase of about 21,000, when you factor that out. You know, often, you know, it's easy, what you look at, say, you know, is that fund balance, so 720,000, is that fund balance in the general fund, you know, is that healthy? You know, one way to gauge that is, you know, ideally, that's 100% of your current year expenditures. So that 720, 838 at the bottom, if you move up, that'd be compared to the 778, 921. So not quite at 100%, it's about 92.5%. So not far off from that 100%, but, you know, I guess a good meter, a good gauge would be to kind of stay at, you know, keep your fund balance, you know, at about 100% of your current year expenditures. Is a way to gauge that. And obviously there's, you know, the water rates were raised, I think 20% from over the next 3 or 4 years. You know, that's gonna help in the general fund, because now they're not transferring out 112,000, you know, maybe that's 80,000 next year and 60 the year after, you know, as the water becomes more self-sufficient, you know, general fund ideally can transfer over less, and that'll help out with that general fund balance. General fund budget, which isn't here, another page later on, I just want to point out that all the budgeting looked excellent, especially given the change from the 12th month to the 16th month. I thought that looked really good. There were a couple things that were over budget by real small amounts, so we note that in a letter, but because it's not material, it doesn't rise to, you know, a formal comment or anything like that. Looking at the Major Street Fund now, had an increase in fund balance of just under 44,000. Leaving the ending fund balance in that fund about 318,860, which, you know, that is with the transfer of 14,000 to the local street fund, but, no real major improvements, you know, major street work. So most of that expenses of 90,000 were just routine maintenance, just upkeep and general stuff for the roads. But that fund balance at year end is a good, healthy fund balance, you know, for that fund, you know, there's money available there to take on a street project as it comes up. And, that fund, that money in that fund is heavily restricted, that the state MDOT sends that out, and, you know, it's gotta be used for specific purposes for streets.
And there are a bunch on our capital improvement plan, so
Yeah,
it's good that it's,
yeah,
like,
right, yeah.
I'm sure the projects are way more than what we've got.
Oh,
so.
yeah, those aren't, cheap, and aren't getting cheaper either.
Yeah,
Capital Improvement Fund, not a lot of activity, certainly there's no revenues, as you can see in this fund. The expenditures are related to the dam inspection, related expenditures.
Exactly, the damn inspection.
yeah.
And, that leaves that fund balance in that capital improvement fund at 19,516, available to, you know, to use for capital improvement type expenditures. And then the debt service fund, so mentioned this one a little bit ago, this was the one that, you know, proved to be a little difficult as far as getting numbers reconciled and making sure we were reporting correct figures here in this audit. The fund balance at June 30th for this fund sits about 871,000. It did have a decrease of about 16,000 this year, and that's essentially from the debt service payments, the principal and the interest were 16,000 greater than the different special assessment collections, the contributions, related to the quarterly sewer payments that are for the debt service, and then some interest as well from that fund. If you flip to page 14, or I guess move the PDF to page 14. This is the balance sheet. Just wanted to point out, you know, I said, you know, there were some things that we had to reconcile and that weren't recorded in prior years and years past. So a lot of those numbers are, if you look at that debt service fund, so this is the balance sheet of that fund. You'll see cash.
I don't know about you guys, I don't have a page 14.
Yeah, I don't know which way are you going? Because we were on page 16.
Yeah,
So you
you,
back up.
you go closer.
Mine goes 15 and then number 4, so is it page number 4?
Did Jim separate them out different or something?
No, it goes 4 to 15.
Yeah,
He scanned it. He has.
I can try to find it on one of some.
Here, I can make a copy. I have one right here, cause I
Okay,
have mine. How
okay.
about that?
Yeah, that'd work.
Okay.
yeah.
All right. That's weird. I don't know. I don't get to see the PDF.
Maybe they stopped when he was scanning them,
Yeah.
because I think the machine pulls the pages,
Yeah.
maybe it pulled them together.
Yeah, I think we sent a PDF up though, so I think you would have to. scan
Oh,
anything.
I don't know.
Yeah.
Yeah, it goes from 15 to 4, and that's what yours is too, Evan, right?
Yeah.
That you're looking at, yeah. Jim is here though, just on Zoom.
Mhm.
Jim's on.
Yeah, he's on
Okay.
Zoom.
Okay.
We can't bad mouth.
Now
Wasn't planning on it, but,
that you know. Keep looking over your shoulder there.
yeah. Any questions anyone has that come up so far with anything?
Yeah, I'm curious, that it says here, like, fund balance, beginning of the year, end of the year, but it's a 16-month period.
Mhm.
Is, I don't know, is there a certain way to look at this that can make it?
The reason that it's the 16-year, which you may not be aware of, I don't know if you are or you aren't, but yeah, the 16-year, yeah, totally. No, it's because we shifted when the fiscal year is for the village to make it better for, like, I mean, like a large number of reasons. We decided to shift it, and you have to either do that as its own budget or lump it together and have a bigger year for 1 year. And
Okay,
so that's what was decided based on the state's recommendations, and everything else was the smarter way to go.
okay.
So that's why it's the only time, like, welcome.
Beginning of the
this
fiscal
is-
year is the way to look at it. Okay,
This is
gotcha.
the only time it will
That's
ever
how-
be this cycle like this, so welcome.
Okay.
Here it'll
Love
be
it.
12.
Yeah, it'll never happen again, has
Yeah.
never happened in the past, it's just one time. So,
Okay.
And that does, you know, if analytically you're comparing, you know, this audit back to your previous audit, you know, analytically it'd be tough, you know, to compare that to, because you got 16 months and 12 months, you're comparing back and forth.
Gotcha.
So, but yeah, going forward, much better comparative numbers, you know, with a solid June year end in place and doing the standard, you know, 1 year, 12-month audit.
Okay,
So yeah, page 14, debt service fund. There's where I said that cash, about 989,000 as of June 30th. So some of the difficulties we ran into were that special assessments receivable amount, that 338,000. That was the number where, like I was mentioning before, from what that number was in the prior year versus what was collected over the 28 months. What the township is showing versus what the village shows, you know, is what I was saying was off, is within that number. I believe, you know, it's, the township was showing about 316,000 is what, when you pull a report up of all the parcels that owe on the debt, you know, they're saying, hey, we owe you 316, or the village is saying, well, based off of a prior number off a prior report and what we collected, we showed that number, you know, is more like 338,000. So that's.
We've been working with them on it.
Yeah,
Yeah,
I think I've been in here some of the times when you guys have been running down, trying to figure out what is going on, yeah.
and they're gonna get to the bottom of it,
Yeah.
so we'll either receive a check or they'll have an explanation.
Or, yeah, make corrections.
Mhm.
And then right below that number is due from other governments. So this was one number that in prior years hadn't been booked at all. And what that is, that's made up of two parts. There's a loan with Notua going on where they owed us.
Yeah.
They owed, you know, the village some money, and the village said, well, why don't we carve that out and actually create a loan where you pay some interest on that. And then there's also some payments they've collected for those quarterly, the debt service payments, where there's still some timing differences on what they owe and what they need to pay over to the village's debt service fund. So that was one number we had to dig into and, you know, look at both as of February 28th, 2023, and get a solid beginning number and then an ending number for this audit.
So it says due from other governments, but is it just Natula right now?
Yeah, and that's,
Okay.
you know, because that's its own.
Right, no, I know, it is its
Yeah.
own government, I
Yeah.
just meant it's not combined with anything, that's
Yeah,
kinda
yeah,
nice.
that's all, yeah, exactly. And then, one of the other things, if you scroll down under liabilities, there's a due to other funds, 405,000. This was another thing we had to do some digging into, but, you know, in the past audits, the general fund, so if you slide over, look at the general fund's got to due from other funds of that same number, and those should always agree. They should, you know, what if one fund owes another fund, vice versa, should never, at any given time, should never, not agree. And in prior audits, what we noticed is the general fund was carrying a receivable for 405,000. And in the footnotes of it, it described to me, it sounded like it was coming from Notua. Well, Notua didn't show that they owed the general fund that money. So we did some digging into it, and it stems from some beginning costs when Notua got going that the village fronted, with, as far as the setup.
It might be correct. When
Yeah.
the sewer system, the actual collection,
Yeah.
when they were doing the project. Cause and then Natula, we operate and maintain,
Yeah,
but during the beginning of the project, that's where.
yeah.
I may just,
Thanks.
yeah.
So, so there was this receivable in the general fund, but no one was stressing up where that money was gonna come from, so. Did some digging into it and, you know, found out that, you know, because that's not on the two books. You know, we don't think there is any obligation or anything in writing that says, you know, Natua was gonna pay that amount. So. The way it's gonna work out, we think, is essentially, at the end of when this debt service is paid off, I think it's 5 years or so, or 4 or 5 years left on that.
2028, right?
3 years, yeah.
The thought is this debt service fund is going to have some excess money in it, and we don't know if that's what that number is exactly gonna be, but there's gonna be something there, and that is essentially how the general fund's gonna be made whole on that 405,000.
Good.
And if what's left after the debt payment isn't 405,000, there is an agreement with Notua that says, you know, the sewer assessments are still gonna be,
We'll be going.
the hook,
Yeah.
the hookups.
Yes, they hook up,
Yeah,
yeah.
the hookups will still be coming, still be charging that and still be coming over to
Yep.
that service fund until that 405 is met, essentially. Is how that'll work. Reluctant to tell you the page number now because, but there's if you flip back and go back to that page 16 we were on, you'll see that there's a category called non-major funds. And so there's two funds that based off of the activity in there and the dollar amounts are, can be considered non-major. So we actually report those like separately in the back of the audit, and then those come together in one column here on this audit, and that's the local street fund and the firework fund. If the page that has the details on those in the audit, page 39 and page 40, I'll be looking at page 40 if you can find that. If not, you can, 16 will still work, it just groups the two funds together.
There is a page 40.
And does it have combining statement of revenue, expenditures, and change in fund balance on it? Okay.
Yeah.
So you'll see local street fund, fireworks fund. Local street fund, you know, not a lot of activity or a lot of going on with this fund. Get the state grants from MDOT, as its routine maintenance road expenditures this year, nothing major on that. Did get transferred from the local, or from the major street fund. So had an increase in fund balance of that 10,429, leaving the ending fund balance at about 60,000 at the end of the year. And then fireworks fund, when I met on January 22nd, we talked about, you know, maybe looking into just combining this with the general fund, as it doesn't have a requirement to be a separate fund. And as you can tell, you know, that transfer in is coming from the general fund. So it's essentially, you know, getting subsidized from the general fund transfer anyways. So talked with Joni about, you know, considering combining that and that activity just being with the general fund going forward. There's nothing wrong with keeping it separate like this, but there's just no requirement to, so something to consider going forward if you wanted to.
Just do a department for that.
Yeah,
Yeah,
like it
it
could
would
be a
have-
department.
Exactly, have its own.
I feel like as long as there's a way for people to see what it is, because I
Yeah,
think
exactly.
people do like seeing what the fireworks
Yeah.
are, but I don't think it necessarily does need to be a separate fund if it doesn't have to be.
Yeah.
Because the departments, you can see that anyway. I mean, that's
Yeah,
how you
exactly.
look at anything else.
Yeah, and you have that contribution from private citizens. and
Yeah, up
things.
top, yeah.
Yeah, so.
All right, next is going to be page 18 through 20 in the audit. What's the business type activities, so there's two funds yet we haven't talked about, and that's the water fund and the marina fund. If we're able to, we good on those pages?
Yep, they're all
Okay.
there.
Perfect. Gonna start on page 19 and look at the water fund. So this is the equivalent of the income statement, similar to what we were just looking at, but looking at the water fund and the marina fund here. So the water fund had a decrease in its net position, a little over 36,000 for this year. Now, keep in mind that is with a $112,000 transfer from the general fund to help that out. And then, you know, also, you know, things like depreciation are included in here, which isn't a cash transaction necessarily, but something that doesn't get included in here is the debt payments that get made either. So one thing I like to look at, you know, because it's sometimes hard to comprehend or see how that fund actually did. If you flip to page 20, this is the cash flow statement, which is required for this type of fund. You know, about 3/4 of the way down, you see a net increase, decrease in cash. So the water fund, from a cash flow standpoint, had a decrease of that 7249 in cash flows. And that's with that transfer from the general fund. So had it not been for that, really the water fund, you know, with 188,000 of cash in it, you know, that continual transfer hasn't been happening. Obviously, the water fund, you know, requires that in order to operate. So it's great that you raised rates and did a study on that, you know, to help with this, because if you go up and look under the cash flows from operating activities, this is the payments from customers and the expenses, you know, to pay the staff tap through that fund and the different goods and services for that fund, you'll see that the operating, you know, is a negative 93,000. So any amount from raising the rates is gonna go in that cash receipt from customers and gonna help that number out, you know, immensely. And just to give you an idea, the water billings that were actually for the 7/1 to 6/30 timeframe, so I'm looking at just the last 12 months or the new 12-month year end, the water billings were about 90,000. And if, you know, I believe the sewer rates are increasing 20% over the next 3 years. So if you just take, you know, add 20% on that, you know, 90,000 turns into 108 year one, 130 year two, and 155 year three. So, really, cutting the operating, assuming there's no big expenditures that are required, really cutting that down, which.
No, we knew that it needed to be raised, it was
Yeah.
just a process to get there, and
Yeah,
it's
yeah,
desperately
that's-
needed,
it
so
was-
yeah.
It was
And there
great.
unfortunately are improvements, but
Yeah.
yes,
And the general fund really is gonna see them, a big benefit, from that.
to not have to be paying that out, yeah.
Exactly. The marina fund, you flip back or move back, to page 19. So marina fund had an increase in its net position for this year of 250,000. And again, that includes the depreciation expense number, doesn't include any of the, debt part of the, or the principal part of the debt payments. So a little tough to, know exactly what that 250 means, so I'll flip you back again to, page 20 and look at the cash flow now for the marina fund. So total cash for the year in the marina fund did decrease 322,000. Now, there's a big reason for that. That's the parking lot project, which at 870 some thousand, I think, about 800,000 or so that cost. Now, you did get some state grants to help pay for, it was 49% of that. But because of, the other 51%, cash did go down, because of that parking lot, expenditure more or less this year. But a good indicator of this fund's activities, if you look at that cash flows from operating, you'll see that the marina from an operating standpoint is positive from a cash flow standpoint. And I think that's gonna be key in increasing the net position or fund balance of that fund, each year, because over the last 4 years, we really took on two big projects, took on the parking lot and then the dock improvements. Which, there's over, $1 million of cost there, so that net position for the marina fund, is down to about, the unrestricted piece of that's not tied up in assets is about 72,000. That's gonna continue to go back up because of the way the fund's operating from a positive cash flow standpoint. And hopefully in the meantime, there's no big need for capital expenditures and let that build up and buy some time for, the next improvement or next, time anything major needs updated. Any questions with, any of the funds and the numbers here we've looked at within the audit? At this point, no, okay. There are 2 letters we're required to do as part of the audit too, which should have those in your PDF. The first one I'm gonna look at is got a title on it, should say Independent Auditor's Report on Internal Control over Financial Reporting. And so this letter here is, any of like the bigger items we identify, some of it is just gets in here because, the way a small entity works, we're required to report that from an internal control standpoint, but any of like the major findings, I guess, would go in this letter, and there's another letter which will be, some of the more minor, some of the just things we wanted to relay to the board. But in this letter, there's 3 things in here. One of them is what is a material weakness, and that's for at the bottom of page, that first page of that letter. It touches on that, and you can go to the second page, but essentially, a lot of small entities of this size rely on their auditor to prepare, the financial statements that we're looking at here, in accordance with, GASB and, proper reporting standards. It's not cost effective necessarily, or efficient for the village to keep the upkeep on continuing that and all that to be able to do this. So because, we're relied on to put that audit together, we do have to have this comment in here, but when I tell you it's north of 90% for, entities of this size, that's, a standard comment to have in. Another comment, middle of page 2 is on, it's called lack of segregation of duties. Another very common deficiency in internal controls for small entities, when they just don't have the number of staff, even available, or maybe it's just not cost effective to hire a bunch of staff to properly segregate duties. We're required to look at those transaction classes and dive into that. And one thing we did note, which, in the prior audits, this comment was a material weakness. I moved it down to a significant deficiency, which is less. And the reason for that is because we, when we looked at the different processes controls, things really do look pretty good, and it's tough with a small office, we only got 2 or 3 people. To 100% get those segregated, but I had a great meeting on January 22nd about things we can look into to maybe a year from now or 2 years from now, when the next audit is, to not have this comment on it all. Talk about some recommendations and different stuff, getting some other people involved and double checking and some checks and balances that could help potentially get this comment off. We look at the payroll process, we look at the revenue side, we look at the expenditure side, and then like also the over cash, the bank reconciliations. And most of them the processes were in place, were good segregated duties. I think it was the payroll and the revenue side, where a couple things doing little differences. And properly segregated duties could see this comment come out in the future, but I moved it down to less significant finding just because I think there's been some good efforts over the last couple of years, to improve on this. And the last comment here is auditor proposed material journal entries. Touched on this a lot, all isolated in that debt service fund where we had to make, some big entries to move some balances around and to get some balances in that weren't in from a prior year. Next letter, communication, those charged with governance at the conclusion of the audit. Really don't get into any of our comments until towards the bottom of page 2. Most of that language in there is required in boilerplate language. I should see towards the bottom of that second page, budgeting and that's underlined, and then sales tax under that, and that's underlined. So this is kind of where some of our comments and information we wanted to pass along, for improvements or just overall talking points with the board, with the council, I should say. So budgeting, as I mentioned earlier, required to have that in here. It didn't find its way in the other letter because the amounts that were over budget were so small or so immaterial. But technically, by state law, should be under budget in all the different governmental activities and the different funds. So just had to mention that, but it says right in there, nothing material. Definitely factor in the whole 16th month change. I thought budgeting looked fantastic. Sales tax, we do some different tests of reimbursements and different tests of credit cards. And, as you know, the village and any government entity is exempt from paying sales tax. And some of our testing we did see a couple instances where sales tax are being paid on certain charges I guess this is just from reimbursements in this case. It was a couple of reimbursements that were made that reimburse sales tax. Not a huge dollar figure, but just wanted to point that out and make you aware in case you weren't already that, not required to reimburse that sales tax.
Johnny, is that sales tax from credit card stuff or just?
No, we have a few accounts that, we just, like DTE or something, we just, in fact, this past week, we were chasing down.
Yeah.
They just charge us sales tax and. Just gotta
And
make
sometimes
that
it can be more work than it's worth to get the sales tax exemption form like on file with a local vendor. But if someone you continually, are transacting with, I would definitely get that sales tax exemption on file with them.
Yeah.
So they're not getting charged. Obviously, we can order on Amazon every once in a while, a couple bucks in sales tax, is not that big of a deal. But you probably could put some work in and get some effort to get a sales tax exemption file on file, even with Amazon, to avoid paying that.
Those steps.
And then flipping the page,
Yeah.
couple other comments, so equipment rent. This was one thing we discussed more in depth on January 22nd, but there are certain protocols in which you got an equipment fund and that charges the other, it owns some equipment and the other funds use that equipment, and there's an official way to actually charge those funds, and it's really tracking first of all, MDOT has a schedule of all the equipment and different rates for that equipment. So using that, and then also when the workers do use the equipment, documenting the equipment they used and what fund they use that on. And completing that and doing that calculation, and that's how equipment rent should be paid from the different funds to the equipment fund.
And we're gonna be implementing.
I was gonna say, yeah, so I assume we're probably doing that then, yeah.
Yeah.
Yeah,
Pretty
Yeah, cause
common.
that's definitely something, yeah.
Yeah.
and then interest rates. A good chunk of the village's cash was earning 0% interest rate during the year. I think there's already been some improvements on this. We talked about this on January 22nd. looking into what the banks you're currently at to, hey, you know, can we get something other than 0%? What do you got for us? Or, you know, if nothing there, you know, I know there's other even investments that would be, the village would be allowed to invest in to earn a higher rate. You know, if we figure, you know, 1,900 or so was the bank account interest for the year. You know, a lot of times that cash, that pooled cash account's got $1 million plus balance in it over the year, even at 4%, that's $40,000 right
Yep.
there. Which would be great in a general,
Yeah.
great in any fund.
Yeah.
So recommendation on that, couple policies required to have. They may or may not have been approved at one point, we weren't able to come up with them. We were here for the audit when we asked for them, so just a recommendation to either get some new ones, approved and in place, or, update the current ones officially and get those, that capitalization policy, the ACH policy and the investment policy in place. And then the last one, that special assessment balance, that's, I mentioned that a couple times already. Looking into that with Leland Township and get to the bottom of that and figure out if, you know, really owed, you know, an extra 27,000. And, you know, if so, why'd that happen? If not, you know, why?
You said they are working on it.
Yeah.
They got some new staff over there too, right?
Yep.
Oh, yeah, they do.
So
A whole bunch.
probably some learning curves on their end, you know, too here, get going on that, but that was all I had, really wanted to touch on and go over. Jammed a lot in there in 35 minutes or so, happy to take any questions, or if you get a chance and look things over more after this, happy to, you know, answer any calls or any emails about any questions, that you have.
I think the biggest one is that sewer balance, we just,
Yeah, it'd be nice to bare minimum get to the bottom of it, but certainly I think there, from what is there, it seems like there should be some more money, you know, it should have been paid over based off of what was collected. Or that was reported as collected.
Yeah, I don't think that I have any other questions.
no, I don't either.
At this time, I mean,
Okay.
if I look at it and I do later, other than, it isn't a question for you, but some of those other policies that they're recommending, do you know if Jim is, or you, or if somebody else is gonna work on those, or?
Yeah, the investment policy, we were very close, in fact.
I know, that I know we're working on, but
Yeah, and I have a capitalization policy that, we spoke about,
Yeah,
and so, you
and
know,
then do
it's
we
just
need to
like.
do that ACH one too,
The
or?
ACH we did adopt
Oh,
after,
okay. Yeah, we
after
still-
the audit.
it was in August, actually, that one was adopted.
Okay.
Yeah.
Just not, it says of June, so that's why.
I was gonna say, cause I knew we were also doing that investment one too, so.
Yeah,
Okay.
yeah, so the investment one, Jane, remember, works very hard on in the
Yeah.
finance committee, and so that one's kind of ready to implement, and the
Okay.
capital one is very close.
Okay, cool.
Yeah, yep, we had some good conversations about that.
Yes.
so, Yeah,
Yeah, we had a real good dinner, it was probably an hour and a half, almost 2 hours, a good in-depth meeting, got going over, you know, a lot of that, just more in-depth, so.
Well, thanks, Derek.
Yeah, absolutely.
thank you.
Yeah, thanks for having me. I know you got a busy rest of your afternoon.
Yeah,
so
thank you.
Appreciate that.
What do we do now, just pause the meeting, or?
yeah, we'll,
I mean, do
Or
we
do we
want,
adjourn?
adjourn and
to
then
adjourn.
do we wanna do a
reconvene.
second public comment then, even though it's not on the agenda?
Yeah,
Yeah, we probably should, because, yeah,
I mean, they've been listening to all this.
yeah.
We're at the second public comment, if there's any public comment out there?
No, there were some people that came in and went out and came in and.
maybe it's about the interviews too, so.
Yeah.
I thought it was in a different language.
Okay, seeing none, I take a motion
I'll
to
move to
adjourn.
adjourn.
Second.
All in favor?
Aye.
We are adjourned. And this is-
11:39.